They tried, but not
They
today.
tried but failed, but it was very close. Let's see the chart when we can. 12,966, and that is very close there, up 0.1%. Is this a failed attempt to get through, would you say, or is this just a meaningless number?
Well, most fund managers and most professional investors watch the S&P 500 because it's just the broader index.
And there's the S&P 500 up 0.1% again.
And actually, we're watching a level there, and it just came short of a multi-year high there because it's unlike the Dow, it hasn't got to a 2008 high. It's still just at a 10-month high or something like that. So both of them failed today. The Dow failure is perhaps a little less important, but it's important because it's important for Main Street investors. They look at this, and when they see a level like that, just speaking with a fund manager, they say they get lots of calls from people saying, "I can't believe we're up this high. What happened? I thought the world was falling apart." And I think a lot of people would be surprised to know that actually companies have been doing very well.
Companies have been doing very well. Greece hasn't been doing very well, but it did get an agreement on basically a restructuring of its debt, which they're not saying is a default, but which is really a default because you're getting a bit clipped if you're a bond holder. And we've got oil at about $106 a barrel now. So I mean, one is sort of good, but I don't believe it's going to last very long. And one is definitely bad.
That's right. Now it's good for energy producers and energy companies.
Sure, that's great.
It's great for them, and
it's
helps
good
their
if you
stocks.
ride a bicycle too.
It's great if you ride a bicycle, but you're right, that's a worry, and I'm now starting to hear investors talk about inflation a little bit again, and that's something that you haven't heard for the past 6 months. I mean, here and there you'll hear people worry about central bank printing, but that really hasn't come home to roost yet. But with $106 a barrel oil, maybe that'll soon be on our radars.
Now, I think what I worry about really with the higher oil costs is the higher gasoline, and that really basically sucking money out of people's pockets and then not spending it on other stuff, and that really could stall what is a very fragile recovery. Is that a legitimate concern, or am I just as
no,
insane
I think it
as usual?
definitely is. It definitely is because it hurts consumer sentiment, and consumer sentiment isn't a perfect proxy for whether people are going to be spending at malls or not, but it does tell you a lot about how confident people are, and people are investors as well, and if they're feeling cautious about their wallets and how their money is being spent on gas, that does have an impact on stocks as well. So it's all part of one big lump of confidence.